Hello, hello. We are the Money Mobsters, episode 10. We're in the double digits. I'm going non-background today. It's dark market, dark room. This is what we're doing. Dougie, what's up? Long week.
Yeah. Like a lot of months happened this week.
A lot of
Um,
what?
well, it was a long year this week.
Yeah, that's probably a good way of putting it. I'm sure everyone, well, not everyone, but a lot of growth investors will say are trying to figure out if they need to make adjustments, what they need to do, or just needing emotional support from the drawdown that is. So, what happened in the last year?
Well, a lot of our favorite names took substantial haircuts in the technology and software side. All of a sudden, it seems like growth is not something anyone pays attention to anymore. Um, I guess Claude is just gonna eat everything for lunch, and you will own nothing and be happy using your LLM.
Now, the part that I think is interesting, and I made this observation right away, as did Chris Camillo, is they are selling off, and I think we even talked about this a little bit last week. They're selling off AI infrastructure names other than TSM, but a lot of the AI names are getting hit, particularly like the cloud service providers, um, kind of indicating that AI is fake. But at the same time, anything that has the possibility of being hit by AI is also getting sold off. So which is it? Is AI fake, or is AI, the best thing since sliced bread? The market can't really seem to make up its mind.
Yeah. Is it coming to destroy your company or is it fake?
Right.
Yes.
Yes, it's both.
That's what we're doing today. This week. So the market's trying to figure it out. And I heard a take today earlier. I don't remember where it was from. But essentially what they're saying is well, we don't know who the winners are going to be, but we're trying to sell the losers right now.
Right. And that makes sense. Maybe just figure out which one the winners are, huh? Well, do we
Well, that's
really
what they're
think that
saying is
Shopify and Robinhood deserve to be sold off by 50%?
no one knows. No one knows who the winners are.
I don't know. I mean, they sold off Palantir by 40%.
Yeah, with
And
one of the greatest earnings. That's twice now. Some of the greatest earnings reports ever to be seen on Wall Street, and they sold them off 2 quarters in a row.
which is kind of odd considering that Palantir is an AI first company, but
Right?
interesting
Mm,
stuff.
well, are they are they an AI first company, or are they a software company that uses AI
Yeah, I mean
on
the
top
second
of
one.
and you teach the AI your ontology, and Palantir's strength is in that ontology and getting the AIs to understand the ontology.
We'll put it this way: they're a benefactor of AI, not, and they've already proven that. Like they've
Yeah.
only gone parabolic since GPT's release. So the more powerful the models get, the better their software and more use cases it unlocks. It just seems like indiscriminate selling. That's where I'll leave it. Um, did you? I think we can get into Robinhood earnings because I think that was the meat and potatoes of the week. Was what in the world is going on with Robinhood? Um, it closed today at $78, down 8%. Now it was down below $75 this morning, so it was getting hit pretty hard, and it looks like it started getting bought up around the middle of the day.
Yeah,
But 78 is not 140.
it is not.
But it's also,
Can confirm.
this time last year it was what, $30.
Yeah.
What did you think about the earnings?
I thought the earnings were good. I mean, you're not going to smash revenue every time, and it was in line with expectations. I felt like, especially because Hood gives us so much guidance throughout the quarter, right? I mean, they're rarely going to surprise. So if they come up a little short on revenue, like, I don't care. What I can't figure out is why. I'm going to pull up a couple of charts here for Hood, and
I'm glad you're pulling some up. I've got some pulled up too.
Okay.
What are you surprised by? That the market doesn't think the growth is sustainable, or what?
No. What is surprised me is what has surprised me is the way that Hood is trading at a premium to crypto. Because that's the thing everybody was using it for, as a proxy on crypto, right? And so it has traded basically up, down, and sideways on. Okay, here we go. This is what I was looking for.
Well, it's not the only part of their business, but it's certainly a large part of the business. There's no way getting around that. And when you've got crypto transaction volume essentially dropping by 30-40%, just because it's not it's winter a little bit, right? So You're going to lose some of that revenue. Does it come back? I think we'll see. But I think that there is obviously a good business here.
I said, except the fall off is more than Bitcoin has dropped. Hood has dropped. I'll make another one of these and overlay it so that the blue is the price of Bitcoin, right? And Hood is the underlying, or a Hood is the proxy to that. But it's 18% of their revenues are crypto. So why this dramatic fall off, especially right here? It's now outpacing to the downside. So it's like, if you were shorting Bitcoin or if you were shorting Hood, you would have done better shorting Hood by almost 2x. How crazy is that? And your thesis is Bitcoin's going down.
Well, it's also capturing a lot of the transaction-based revenue that is happening with options, right? Because if we turn into a risk-off market, then it's going to be a really tough lap where you might even see negative numbers for the next 3-4 quarters.
Yeah.
But yeah, that is striking that you're seeing Hood, really get burnt even harder than the underlying.
So this seems like something that would have made sense to me as we start to differentiate back here in April of last year. Hood starts coming out with the prediction markets, and so they're having an entirely new revenue stream coming online. So they're having, and they get earnings and they get multiples on growth and everything because they're a stock and not a currency, right? And then MicroStrategy, the green line, was struggling as Bitcoin started topping, right? And now they've both kind of gone down. MSTR kind of led the way down first, but when they caught up, they've kind of moved in sync. But Hood has just fallen off the proverbial cliff. And that I do not understand what traders are thinking.
Well, and remember, part of that is, even the Hood bulls were looking at 135, 140, 145, thinking, do we really deserve a 30 price to sales? Typically, when you get a SaaS type company with consistent growth and durable revenue that is subscription based, a lot of software companies trade in that 10 to 15 P to S range. And Hood was sitting at a 30. So you could even just make an argument there that run in July and then into October was a little bit overstretched, and it's just kind of self-correcting, going a little bit too close to the sun.
Yeah, but a 12 RSI, I mean, come on.
Yeah, it's certainly tough.
So anyway, Dougie got shook. Dougie got shook and exited almost all of his position.
Now,
Hate to say
I
it.
wouldn't say that shook because you still made money. Usually, when I hear shook, it's like you're selling in the red. But like, let's be clear, you still made lots of money going long on
Oh,
Robinhood.
still made lots of money, but you kind of set in your mind your own valuation of your net worth, right? At whatever the highest number it's been. And so when you get used to seeing kind of a certain number in your total net worth, and then you see that number essentially cut in half, that's no fun. Even
Right.
though, yes, I made money in that trade, but there was a lot of pain to start off on the trade. So you felt like you were getting paid well on the back end, and now you're starting to feel a lot of pain again. And it's like, nope, I'm out. So I should say this, and we'll get into it more later, but Austin and I are in two different stages of life. He has many, many, many more years to take risk on, and I'm not the same age I was when I first started these positions. So I have to defend them a little more aggressively, and that means realizing losses while they're still acceptable. One could argue I already rode this all the way down, and I may have been selling the bottom here, but
But again, it's still a winning trade.
Yeah,
And
it's still a winning trade for sure. It's just I have to make other. What this taught me or reminded me is, I'm not 33 anymore. I'm not 34 anymore. And a lot of the people that I spend time with in our community, I'm very fortunate to have a lot of younger investors to hang out with and talk stocks with, and they bring a lot of energy and everything to the space. But I have to remember I don't have the same time in front of me that they do. And I kind of lost that perspective for a little while. So I have to backtrack, eat some losses, get a little more defensive than someone like you or Matt or Amit or any of our other younger friends under the age of 40 would have to do. But
yeah, and that's good strategy too, and that's good risk management because, like you said, you're playing with a different time horizon. So your time.
I mean, you could literally do nothing until you're my age, and you'll get two doubles. Like you could take everything you have, put it in SPY, totally forget about it.
Right.
And by the time you're my age, it'll have doubled twice. I don't have that. I don't have that two extra doubles in front of me anymore.
But your willingness to get a little bit more aggressive and lean in the last few years, again, I have to keep drilling it because I don't want you to lose sight of it. You still made a very solid trade, and your risk got you paid. It didn't get you paid as much as it could have, just simply due to some timing, but it was still a W.
Yep. And now I've got something to lose, so I've got to be a little bit more aggressive in defending it.
Now, when it comes to like Hood itself, so this is a breakdown of the revenue that Hood makes by net interest income versus other. This net interest income, this is really the portion that I think is the growing business that's fundamentally the backbone. This is where credit card, this is where cash sweep, this is where you have just AUM on the platform. This is Robinhood Gold. But then you get into the transaction-based revenue, and it just looks a little bit different. And this is the part that you expect to be a little bit more cyclical. And you can start to see this curve where it's like slowing down a little bit. And I think everyone started to get the spidey senses tingling of, is this 2021 again? And obviously it's not exactly like 2021. Peloton wasn't trading at an $80 billion market cap. But at the same time, I don't know about you, Dougie, but I have been getting asked left and right the last 4 or 5 months from people who I was begging to get into stocks in 21 and 23 and 24. And all of a sudden, now that everybody's interested in stocks and the options volume was going through the roof, and on top of, crypto making its comeback. And this is primarily the reason that I decided that I wanted to exit Hood entirely and just wait for a better day. Because like I discussed, if you have a 30 price to sales, you're expecting something that looks a little bit more like service now, where it's just going straight up and to the right? This is what you pay a SaaS type price to sales for, something like this. When it gets a little bit less predictable, you need your discount rate to be higher. And maybe it's a macro call. I don't know. I don't think I'm Stanley Druckenmiller, but you could feel the heat coming around the corner, and I didn't want to be there when the cops showed up. Okay.
Yeah.
So I don't think they delivered a bad quarter at all. I would like to see Hood get more into what I'll call, maybe it's not the perfect word, but I'll call it adult products. Okay. We know that they can build products. We know that they can scale them, and the execution is good and the user interface is solid, which leads us right into banking. I think that's where they can lean in a little bit more. I didn't hear anything about trade PMR, and we really haven't since the last, really since they acquired them. We haven't heard any progress out of trade PMR on the investing side. They have this network of advisors that I think they could really lean into. They obviously have a client base that could use some advisors, but instead we're seeing like transaction-based revenue continue to be flat while they, work on sports gambling while pretending that it's not sports gambling, even though 90% of the trades are sports gambling. I don't think any of these are bad things, but if you wanted like a sustained platform to bring in lots of really solid users that are going to be around on the platform for a long, long time, I wouldn't focus on sports gambling, although I see like what they're going after.
Yeah. I think, man, the tougher the political headwinds get for the current administration, the more political risk they're going to have on this as well. I think you showed me an ad earlier in the chat that was, so there's some group now, it probably, okay, guarantee you this group is backed by Disney. Okay, so they have unlimited funds. American Gaming Association. That's the casino owners and Disney and the NFL who want to take out Robinhood now. And they will pile the money to Elizabeth Warren to make that happen. And yeah, it's, if the administration gets has particularly bad midterm, they're going to lose enough seats, and it's going to be impeachment for 2 years, and they won't be able to defend anything they've done, and it'll be 2028 will be a bloodbath, and then the I don't know who the president will be, but it'll be the Elizabeth Warren administration at the SEC at least, and all that revenue you can kiss goodbye.
Now, Laura brings up a good point here. Like, why do people care? And yes, I totally agree. Like, I'm not making a moral judgment here. Now, the argument I made to Dougie yesterday was you have a zero-sum game. So typically when you invest on a platform, whether it be equities, fixed income, or just investing in the indices, you're going to expect that AUM to climb over time as the investments grow, pending a bear market. But when you're running a prediction market, think of it as a rake. So $100 go in, Robinhood takes their cut, and so they take their dollar out, and then $99 go to the winner. And then they make another bet, and those $99, Robinhood takes $1, and then those $98 go to the winner, and so on and so forth. And it actually just churns money in terms of like if you add up the total amount of money between better A and better
That's nothing
B.
new. That's nothing new.
It's nothing new, but it is a little bit different in terms of the economics.
All these trade desks run dark pools on their own, and they're taking all the fees and keeping them for themselves. That are, they're tiny fractions of a cent, but they're just eating stuff out of the middle as well. And since it's a dark pool, it's not even going to the exchange for the best national price. It's just being executed, in house at JP Morgan or whatever platform is doing it. And so they've got one customer who's buying, another customer who's selling. They sit right in the middle and collect all the fees at the exchange, plus any commissions, plus any options, contracts, fees. Like, it's the same thing. One could argue that it's actually a little more transparent because you see how much they're taking out of it rather than it being hidden.
Yeah, I agree that prediction markets is greater than like your traditional sports book for a lot of reasons.
Reduction is not that much. Let's be honest.
It adds up over time, and look, I think
is the casino evil for setting up the game and taking a rake when the poker players trade their chips?
And I'm not trying to make a judgment on evil or good. I'm just trying to look at it
like a lot of people are. So that's.
I mean, maybe they are. I mean, I think we live in a free country and that adults are responsible for their own finances, right? Like if someone wants to go invest in Doge with hat, like go for it. I think that's a dumb thing to do, but like you're allowed to do that. You're an adult. If you want to piss away your money, go for it. But obviously this isn't Doge with hat, but some of the bets are, a lot of the sports bets, it's not that much different. You might as well flip a coin. And that's fine. You should be allowed to do that. But when you have a rotten taste in your mouth because you've come to a platform, maybe you lost on a call option, which all brokerages are going to have, or maybe you just lost your sports bet, like it sours the brand a little bit. And it seemed like Robinhood was actually at a really good spot in 2025 when they were able to turn the corner from, hey, we're like the silly free trading app that turned off the buy button from GameStop. Like it seemed like they were really in a good spot of turning the corner there in terms of PR and their brand image. And then they got into sports gambling because they had all the IRA product and they were building that out and they were getting lots of money onto the platform and people were trusting Robinhood with lots and lots of money. Yeah. And then to go to sports gambling and then try to like do this Jedi mind trick and wave the hand that it's not sports gambling when everyone knows exactly what it is. Like, I don't know. Could it have been? It's a profitable business line.
So lean in more poly market type of thing where they were trading on all of these other kind of futures contracts rather than sports. But I really don't care personally. I just it's a generational morality shock. Ultimately, I don't. I've dabbled a couple of times. It's far easier and simpler and a lot less hassle than transferring money into DraftKings or something, which, by the way, is not legal in Texas either. So you have that to consider as well. Robinhood, it is legal to trade sports futures predictions on Robinhood, and it is not legal to bet on horses or bet on sports the traditional ways.
Yeah, and like you mentioned, and June mentions it here, like they are directly drinking someone else's milkshake here. Yep. And that's going to have political pushback, especially like if they make this some indigenous versus like the tech billionaires type argument. Like I don't want to give them ideas, but like that's where I would go with it.
Bring it.
So you still have a little bit of hood, but how are you thinking? Because I'm waiting. I think I'm just waiting for a little bit more clarification on what's going on in the macro before I dive in. But how are you sizing?
Well, look, Vlad is a fantastic CEO. And
No
so I
doubt.
feel like I'm out right now based on momentum only, and I'll be looking for a time to re-enter and start rebuilding this position.
Okay.
Um, and it's a business that I actually understand because I've been in it so long now. That is more attractive to me than trying to go learn an entirely new business. Does that make sense?
It does.
Like, I mean, somebody was talking about Fiserv the other day. I know you like a lot of, you have like Fix and other things that seem like excellent plays, but I don't know anything about those businesses. I had to start learning them from scratch. I already know Hood. I already know the players in it. Why did they have the best tech in Wall Street when it comes to talking to their investors on their earnings presentations? Why is their pitch deck or their slide deck the top? Like, these are things that you think Google and Microsoft and others could put a little more effort into, and they just choose not to. That's what that tells me. So
Well, Robinhood
Robinhood
and
appreciates its investors as its customers, I think.
yes, that's exactly what it is. Like I'd be willing to bet that a lot of people on the platform also own Hood stock, like an insane amount. Um, and you can tell on the earnings calls. I know some people liked that he came right out and started talking about the stock price, but to me it seemed a little bit like kindergarten center that you have to like hold people's hand to talk about the stock price right out of the gate. Because people were even joking in the chat before the call started of like, why is the stock price down? Like, because it's such a
And
stupid
then that was
question
the
to ask on an earnings
first
call.
question.
Yeah.
I mean, it was live questions. It's not like they're controlling them.
I'm trying to pull up the presentation here because I wanted to cover some of the stuff that's been a little bit flat. Did you
I
notice?
love that you said that, Laura. Josh Brown calls losing trades and gambles tuition.
Yes. Yeah. If you guys have not listened to the Basis Points pod with Josh Brown, so that this is a Mitz and Steve's new pod. Um, Josh basically said if you go and make a trade and you lose money, this is usually if you're on the newer end, it's going to happen at some point. You're going to lose some money. That's tuition. That's how you learn the mistakes, and that's valuable. Hopefully, it's with a small amount of money, not a large amount of money. So what I was going to pull up here is some more Hood stats. This is, where was it? It's the slide with their margin book. Must have gone past it. Oh my gosh, who let me drive? This is crazy.
But see what I mean? Like, that is just the best looking slide
Oh,
deck
it's
out
clean.
there.
No doubt about it. It is very clean. Oh, here it is. Yeah, so on these four charts here on this exact slide are equity volumes, options contracts in the top right. You've got crypto in the bottom left, and then you've got margin book on the top right. Now, one of the things that I was concerned about is that the margin book is growing. And then a lot of the assets that I presume are being held by Robinhood investors are just a little bit squishy. All right. Like, I don't think there's that many people on Robinhood that are owning like Procter and Gamble or Johnson and Johnson. You know, they're leaning into your IRENs and your Rocket Labs and some less quality stuff, either even further down the barrel than that. And they're using leverage and they're using contracts on top of having crypto. So I worry about the margin book just a little bit. And then you've got the seasonality here of options contracts peaking in October and then normalizing.
Well, I don't know if I agree with you on that.
Okay.
On a couple of points. The newer Robinhood customers are much better and much more conservative customers than their older ones. Now, everybody is making money. They have a deck on there that has like quite a few lines that run across the screen multiple times, and it like they're colored based on how long they've been customers. And maybe you can find that one.
The cohort chart, right?
Yeah, the cohort chart. Yeah. So the bright lines are older accounts. So you can see the newer accounts started larger and have had better performance.
Right. Now, this is primarily, if I had to guess, and I think it's a good guess, I'd actually be surprised if I was wrong. These are your IRA match people who are bringing in large IRAs onto the platform, right?
Yep, probably. And then one other little point that I'll push back's the wrong term. Maybe just get another perspective on. And I don't believe you're a Robinhood customer, are you?
I'm not allowed to be. No, because I work with
I didn't think so because of your professional life. Okay. They are internally incentivizing. They must be making a whole lot of money off of margin because they are incentivizing margin. Like they not only want you to take out margin, they want you to bring all your margin there. So if you're seeing margin balances go up, they're doing that on purpose. That's advertising working, is how I see it. Does that make sense?
Mm-hmm.
Okay. So Austin sees it as a concern, and I look at it and like, well, for whatever reason, they want more margin. They want people taking out more margin, and so they're incentivizing it.
Well, because it's more net interest income. That's like, yep. Yeah. And but have they underwrote it properly? Are they giving out margin to people who shouldn't be having margin? How much margin are they giving out? And like they're doing it at such a low rate compared to other people's margin rates that like, are they even charging enough money is the other concern. This is my insurance underwriter background showing a little bit here that I'm like, oh, what if?
Are you familiar with the pricing structure on margin?
Tell me about it.
Okay, I'm gonna see if I can pull it up without giving away account details.
Okay.
Let's see if I can. I know there's a way to hide balances. I just don't know how you do it in the.
While you're bringing that up, there was one other thing, and this is kind of nitpicky. We'll see if it becomes something. So this is a chart of all of Robinhood's OpEx. So we got different categories here. You've got tech and development. Obviously, they're going to be spending on that. Operations, SG&A. The SG&A is actually, this is a really good looking chart. Like they got fit. They did a really good job with this.
Yep.
Technology and development, like spend the money that you have to spend. Okay. Again, not going to question that. The marketing, I think if this is going to scale over time due to all those match deals that pay out over 5 years, because they would have to amortize those matches that they did. Because if you pull your assets out within 5 years, you have to pay that promotion back, right? So they amortize that customer acquisition cost over that 5-year period. And I just worry that partially the other shoe might drop on all those matches where you might see this inflate a little bit more than people expect, because you're getting the benefit on the front end. When you go out and you give everybody a 1% match, it looks awesome because tons of assets come onto your platform. But over time, I think, you might see this marketing number get loud. This is trailing 12 months. Let's make it quarterly, just to be fair here. So yeah, it's not too out of control, but this is something that I would keep an eye on.
Okay. Well, I'll disclose a little bit here. This is not by any means the maximum or really a number that means much to me at all. And maybe people won't even notice it, but here's the rates on. So those are really, really good rates for borrowing money.
These are stupid cheap.
I mean, this is like what credit card, right? Like just like pay off your credit cards with your margin, right? Pay your mortgage with your margin. Pay right? Buy a house on margin, right? Like last night Chris Patel was talking about fixed income. He's running, it sounds like he's running a strategy now on Robinhood. And I mean, my guy's got 7 figures there in his taxable account. And he said, I'm just saying what he said on the stream, so I'm not giving away anything personal info here. He said he's got like upwards of $1 million in PDI, which is paying like 14% monthly. So he's basically making 10% a month on $1 million.
And Dougie, these are APRs, right?
Yeah.
Okay. That's what I figured. I thought they had to disclose it in APR.
Yeah. But yeah, so these are obviously very attractive rates for people who are paying margins somewhere else to bring it over here, and you can save money.
Well, and now
and then you think about the banking, and so here's the other crazy thing: the banking. Did I send this to you earlier? Because I just got approved for banking this week.
You did not. You were telling me that a friend of ours got approved for it and was giving you some feedback.
Okay, that was me. Unfortunately, I don't have a desktop app yet, but I can tell you, if once you have enough assets in the Robinhood ecosystem, it doesn't have to be held in the banking side. It could be your investments side. But once I think it is 150,000, then you're a premium customer for banking, and then you start getting like all the fees for everything waived. You get 3.5% APY on your checking and savings. So if you think of all the money you're keeping in your checking, and then maybe money that you are taking out on margin, there's only a 1.5% delta. How crazy is that?
Yeah, I mean, the arbitrage that you described is what makes me think that they're actually underpricing margin, and that makes me a little nervous. You know, you don't want to give away.
Yeah, but look how selective they're being on the credit cards and on the banking. So, I mean, they certainly are not going to be confused with a conservative company that is operating just a bank, like another company we're about to talk about.
Sure. Does that pivot us to what?
It's
SoFi?
just a bank. Yeah.
It's just a bank. Yeah, I mean, SoFi's been selling off, which is pretty weird because SoFi is not getting hit by this AI doomsday type trade, nor is their revenue transaction based in the same way that your brokerages are. They must be seeing some sort of like demand weakness, or they're just like less sure of what that demand is going to look like for the next 12 months. But I've been buying SoFi hand over fist at these prices. Not investment advice, guys. Do your own research as always. But I liked it at 28. I'm buying more at 21. I bought more yesterday morning at 21. Seeing it slide to 20 today, I'm just like, if it gets ridiculous, like this might have to be, a third of my portfolio. I'm at 16% right now.
Wow, that's big for you too.
it's pretty big, but I'm not afraid to go bigger on this. Like if they keep selling off this company, because at 8% position, it went down. So I'm like, okay, what am I missing here? And I did more research. And then it goes down even more from 26 down to 21. I'm like, what am I missing here? Like, what is the market trying to tell us? And it's actually not telling us jack shit. It's not telling us anything. And the market's just selling off a lot of stuff. So when nothing has changed about the thesis and the price is cheaper, Peter Lynch says to buy that shit. So that's where I'm at. I'm walking into the hornet's nest. That's worked out well for me in the past with Google and Palantir, averaging down when it makes sense to. And if you have to go heavy, sometimes that works out. What are your thoughts on the fact that they printed a tremendous quarter and then immediately get sold off? I mean, the market didn't even give it the hope of green. It just right away.
I've been a SoFi shareholder long enough that doesn't faze me. That is expected. I don't know why everybody thinks, oh, we're going to have a great earnings and it's going to be amazing. And we're finally, I mean, this is like Lucy with Charlie Brown football. Like a triple beat means nothing because they sandbag so much that the street doesn't care.
Yet when they give guidance, so we've established that
the street doesn't care because because the guidance is the sandbag.
But that's the thing, like they've sandbagged 4 years in a row now, and every single year they destroy their sandbagged guidance. And then when you look at their 2026 guidance and you compare it to the analyst estimates, the analysts are still saying, we don't believe your guidance, even though they've smashed it over the head 4 or 5 years in a row. Like that's the part that's a little bit confusing. I don't know. They set the bar low and they destroy the bar every single time. Yeah, yet so they're still doubting the guidance.
Tired of them setting the bar low.
I'm ready to put on my tinfoil hat. I've kind of felt this way about SoFi for quite some time. You have banks rating other banks.
Yep.
You have a company that seems a little bit like it's inevitable that they're going to get in the S&P 500, and institutions don't really have enough. They don't have the skin in the game yet. I'm tinfoil hat Austin. Do. I think some of this is intentional, but we'll see. I think it creates a buying opportunity for people who want to get in.
I mean, I wish I had bought more at 4.
Sure. Yeah, 4 was an easy buy. When Noto started buying $10 million out of his own pocket.
Yeah, I wish I had bought more at $4. But I had a lot, and I had spreads and options, and some of those went nowhere because the stock stayed down for so long. But a lot of the stock did well. I still have a few thousand shares, but it's nice to see this come up. But man, geez, this RSI is just out of control, bro. 19
for SoFi.
Yeah.
Yeah, I mean, it just seems like opportunity to me.
Last Thursday.
When you get people like heading for the exits on
like me, I couldn't hold. Like I sold a bunch of stuff on Thursday.
Well, like specifically on SoFi, nothing has changed. That just seems like one of those points in time that you do have to walk into the hornet's nest and see if you can get some honey.
I was actually talking with my wife today and was like, there's stuff I have now that the positions we have, because I sold a bunch of Palantir too. And for reasons I'll get into towards the end of the pod. And it was just like, whatever it was 3-4 years ago, buying Palantir at 6, 7, 8, 12, 15 was easy. because I saw something other people didn't see. Buying Robinhood at 8 was easy because I saw things other people didn't see. I don't feel like I'm seeing anything people don't see right now. If anything, I'm late. I'm late to all the parties, and all the good stuff has already happened.
Well, and Warren Buffett used to say this all the time. Like, you don't have to baseball. If you don't swing at strikes, you can get 3 strikes looking.
Yep.
Investing is not that way. You can let as many pitches go by if you want. Other than decay of the US dollar, you really don't have to swing at pitches if you don't want to. You can just kind of wait for your pitch. And then when you get it, swing the bat as hard as you can.
Laura says we're in a moment of rare opportunity, and I agree. I just don't know where to go right now. One of my other theses got blown up today a little bit. One of my other plays. But it was a growth play, and growth is being completely ignored anyway. So the fact that it didn't grow as much as they were hoping to, does that even matter? Like, if the market is no longer giving anyone a discount for growth, if you come in and you report, oh, we're not growing as much, then who cares?
Well, speaking of like names that like could be an opportunity here, I was doing some research on what might be the most boring companies here. I'm going to run off half of the viewers to the stream here.
Oh, yeah, here we go.
Here we go.
Boomer stocks.
We're going to stay in financials here. So these are some long-term compounders. We've got Moody's, S&P Global, FICO, and Intercontinental Exchange, ICE. These are, I call them matrix stocks, okay? They operate within the matrix. These companies, most people like haven't heard of them. And Intercontinental Exchange, they own the NYSE. And they also have a real estate platform. FICO, everyone knows them from the score, so they're rating stuff. And same thing with S&P Global and Moody's. They're rating bonds. They're doing research. And these names have just gotten destroyed. I mean, over the last month, you've got S&P Global down 28%. Moody's down 23%. Like, these are companies that really world-renowned investors like Berkshire, Dev Cantasaria, Chris Hone, these are supposed to be monopoly / duopoly level companies that own the whole market that are getting sold off right now. And this is the type of thing that, like, I think kind of made me nervous when all this nonsense started a few weeks ago, seeing companies like this get crushed, that I'm like, okay, there's something bigger going on here. What could it be?
So these are all the types of companies that, I know it's on another line in our doc, but these are all LO companies, and we'll get to the rest of that in a little bit. But these are they're not LO companies, which is low obsolescence. So there's very little that Moody's does that you could not have an LLM do, which is scour public information, aggregate it, and then according to a predetermined calculation, which is also called an algorithm, spit out a rating score of risk. Right? I mean, because that's what Moody's does. They aggregate information, historical and current information. They have an equation that they then apply to a whole bunch of information and do the math, and they come out with their risk rank. That's absolutely something an LLM can do already, and you don't have to pay them.
This is the worst one right here.
Yep. Morningstar does the same thing. It's a data, anything that is data or information aggregation, and then just reform it and spit it back out again. That is all. Anything that takes data and turns it into information, I should say, that's all doable by an LLM. Does that make
But
sense?
like, aren't you gonna need a business there that stakes their reputation on being right? Like,
No.
we catch
No,
LLMs
no, no,
making
no, no,
so
no.
many rudimentary mistakes that if you're an insurance company and you're trying to buy $50 million of bonds that you need because people are going to eventually have claims when the rain comes, I'm not sure I'd be comfortable buying bonds from a company who's like, oh yeah, we fired the 30 people that were going to rate all these bonds, and now we have 5 people overseeing AI who is rating these bonds for us. Are you guys still interested in these bonds? It's like, I think people
Well,
are going to want to see
what's
proof of
worse?
concept first.
What's worse? Or the companies that we're rating are paying us for a better rating, which they've also been known to do.
2008.
So so the LLM, which doesn't care whether you're paying it or not, can at least provide you unbiased information that maybe it made it up, but at least it wasn't on the take.
Yeah, but like someone controls what the model outputs. So then wouldn't you just be able to
True,
like, tweak the model?
true, but you could run this against Chris and Matt were doing this last night. They were running price predictions through the various models.
Well, what I'm saying is like, say,
For fair valuation numbers through various models, like based on different stock names. So like if you don't trust one model, you can try another model for the same exact price, which is almost universally free.
but if all the models work in like the same inherent way, like they're going to have the same inherent, um, what do you call it, blind spots, right?
Yeah. And you don't think Moody's has blind spots?
Of course
And
they do,
and,
but they've
and,
been doing this
and
for a
so
while.
so let's ask them. If you're making an LLM, why don't you hire one person who used to work at Moody's and say, tell me where our machine comes with all the blind spots? And then you code that in and boom, it doesn't make it anymore.
You know who's in the best position to do something like that? Moody's themselves. Moody's themselves. They already have the staff. They've already got the business. They've got the reputation. They can just integrate it into their business.
Okay, yeah, but then you lay off people and you're right back where you said. Would you
That would be
trust
margin
a
expansion.
bunch of people and we just laid off 30 analysts and we now have 5 people monitoring the AIs?
But that would be a margin expansion moment rather than like some new company who's like, hey guys, we're here to rate bonds. We just opened shop last week, but
Well, that's why Gen AI is, or not even Gen AI, but just LLMs are so good because they're good at general tasks, which could be okay. This I need to do a research project about the coefficient of hydrogen fusion in a star, and I can use the same LLM to help me rate bonds. And I can use the same LLM to teach me how to paint. It's like that's what's so amazing. It's the same piece of software that does many things. And you don't have to write something specifically. Now, if you wanted something specific, you could train a model on bond rating, and who knows, maybe that'll be a statutory requirement or regulatory requirement. Oh, by the way, I so could see the U.S. government starting to trip over themselves and say, your LLM is not allowed to talk about stocks and bonds unless you are licensed and da 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 da. And if you don't, you'll have all this other liability. And so all of a sudden, ChatGPT will be like, I cannot provide you any financial advice.
I can see it. Moving right along here, but in the same note. So same idea, different company list. Intuit, ADP, Workday, Adobe. This section has been even worse than the financials we just talked about. I think Adobe and Workday are pretty obvious here.
Yep. They just lost all their pricing power. Their
Yeah,
software is going to be around for a long time, but they lost their pricing power. Because now, giant corporation X that I work at says, oh, yeah, we are, we have this many seat licenses for Adobe Pro now. And then Adobe comes to them and says, okay, yeah, we're raising the price. And we're like, nah, we're good. If it gets too expensive, we'll try Claude code something for us. And, maybe that'll work and maybe it won't, but we don't need to pay the higher pricing.
Maybe, maybe not. I mean, here's kind of my thoughts on this. I know we're obviously early innings, but I think it's clear that Claude can make a workday, right? Like the software is not that complicated,
Right.
but I do think that you have like this privacy reliability concern where you have, and this applies for Intuit as well as Workday and ADP. You have a lot of private info, social security numbers, addresses, how much you make, tax information, social security numbers.
Are you telling me Gemini doesn't already know it since they use single sign-on with Intuit anyway through Google?
Yeah, I mean, if Google comes out and makes something, like, it would have to be a reputable company that people already would trust with their information, like maybe even Apple, but like obviously they're not going to get into this space. Maybe Microsoft, but I think the concern that you're going to have a bunch of like vibe coded startups that are popping up in the valley that people are going to like trust all their tax documents, or are going to be talking to, corporate leadership of Fortune 500 companies saying, hey, I can save you $20 million a year. You don't need to buy Workday anymore. Move all your most valuable information in your processes. I know you're worried about running your business, but do you want to save these $20 million and it could potentially throw everything to shit? Like, let's go ahead and move over to Workday 2.0 Vibe Code edition, AI edition, right? Like, it just seems a little bit unlikely. What seems a little bit more likely is that these companies adopt AI and defend their moat. I think they can pull it off. I'm not buying these dips, but like the Intuit dip is looking juicy.
Well, what's the PE right now on some of these companies? Like, what's the PE on Adobe?
Adobe is dirt cheap. Let me pull it up. I want to say it's getting close to under 10 forward.
Okay. So basically what you're saying is 10 years of profit. I'm the current price I'm paying is going to take 10 years to pay off. Well, the case I made you that they've lost their pricing power means that their ability to keep growing at the rates and their ability to keep earning the same amount of money for the next 10 years is now in question. So yeah, the multiple has to compress.
Yeah, does it deserve a compressed multiple? Absolutely. Is 10 fair?
Well, I hate Adobe anyway, in principle, so I wouldn't touch them anyway. But I understand that they make important software software that's been important for the last 2 decades. But
is 14 forward PE for Workday? Is that fair? Like, they're at a 4 price to sales. This is a software company, by the way. If we look at the income statement, like, they're growing double digits still. Yeah, it's like trickled off over time, but they're still growing double digits. Their EPS.
Remember, it doesn't matter if you're growing or if you make money. What matters is, are you high obsolescence? Can an LLM do what your company does? So what did you say the PE was? 4?
The price to sales is 4. The forward PE is like 14.
Okay. So yeah. So can an LLM do what your company does in 14 years? In 14 years of developing LLMs, think how far like streaming video has come in 14 years. 14 years ago, we were still renting DVDs at red boxes.
So you think the Gates principle applies? You underestimate how much you can, or you overestimate how much you can do in 1 year, but you underestimate how much can be done in 10.
Yeah.
I mean, that's valid. I just don't know if there's going to be an annihilation of 200-300 software companies.
No, there will be ones that survive, but they will not be ones that take data and turn it into information. If you're an information aggregator for Workday, for example, it's it's behind the scenes under the hood HR software that helps write job descriptions and post internal crap and send out a whole bunch of spam internal emails that no one reads, and manages your corporate training that you have to accomplish, right? An LLM can do that.
It can do it, but I don't know.
Especially if it's just running inside the network, like inside your companies. Like you could go to whatever the Schwab Pilot, whatever company you work for, right? Branded Copilot for the company you work for, Schwab Pilot or UDoc Pilot, right? And you go to your little site there and just ask the LLM, what training do I have to do today? And boom, it just lists all the classes you need to do, which are just stored video files with a quiz at the end. Like, why does Workday have to exist?
Why does Workday have to exist?
Yeah, it's a YouTube playlist with some HTML quizzes at the end.
Well, I think you're paying Workday to make sure that it's operational and works the way that it's meant to work without issues, and that you've got like a guarantee there that if there are issues, you've got tons of staff who are accountable, can fix it, and they've got the reputation there that if there's like a data leak or there's a big problem, that there's an entity there that you can like go after.
How well did that work out for everybody who went after CrowdStrike?
Good. They got discounts, right?
Oh, they got discounts. They didn't get made whole. They just got discounts on future purchases. So they're still
massive discounts, though.
Yeah, massive, but they're still locked in.
Yeah, because it's operationally mandatory that they have it. And I think Workday could be the same thing, right? Like, is it operationally mandatory? Yes. But obviously the outstanding question is, like, can you reproduce it? I think it's a little bit underestimated that, like, you can't just, like, I don't think a Workday gets built in under 2 years. I just don't. I don't believe it. And then on top of, like, even on top of building it, then you have to go and find all these people and onboard them onto it. And that's a whole another thing, is like moving all of your institute or all of your organizational stuff onto these platforms. Like we've seen
a Claude bot can already do that.
But we've seen some of these cloud migration projects take like a year and a half, 2 years.
Yeah, it's because humans are slow and they're stuck in the middle. A Claude bot can do it in one night.
I mean, if we see it, I'll tuck my tail between my legs. I think it's getting a little bit overdone. So, some of these companies are definitely going to make it through the other side.
Yep, some will. We've just picked two particularly bad ones to look at, so it's easy for me to shoot holes in them.
What did we have next?
If you're a data storage or data aggregator, the LLMs are coming for you.
Which brings us to our next topic. I didn't watch the episode, but Halo. This was. He didn't come up with it, did he, Josh Brown?
Yeah.
He did.
He came up with it, and he's coined the term now. Halo.
So, yeah. High asset, low obsolescence.
Yep. So, and the easiest way I can describe it is, does your company have heavy machinery? Yes. Then an LLM can't do what you do.
Or it could even be like physical real estate, like Walmart, right?
Yep. Or something that I think would apply, but the market hasn't realized that part yet. But distribution channels. if you have extensive, actually they did, because look, Apple ripped today. Apple is the distribution channel. Don't think about Apple as a iPhone company. Think about them as an app store company.
Okay, then why didn't Microsoft rip?
Because Microsoft doesn't own the distribution channel. Microsoft has a really crappy app store.
Well, for the enterprise though, like there's no one who has better
F365.
Yeah, but like there's no one with more enterprise customers than Microsoft.
Laura, I love your statement, and I can never repeat that often enough.
She's teasing a very well-known European software company.
Yes. That Palantir should have destroyed already. I don't know why they decided to partner with them instead. Sorry.
So Halo.
I got distracted by the brilliance in the comments section.
Halo. So I think a few examples that we had come up with were also Caterpillar.
Yep.
We've got the railroads, John Deere, even Comfort Systems USA, which I know is just I'm gonna be so sad if it just keeps running.
Actually look up in our chat, because I sent you it's not in the private chat, in the WhatsApp. It was the returns at 25 versus 26. I have some really good outliers on there that you can pull those up. And
which one was this?
Returns. I'll just download it and pull it up and show it. It might be faster because I've already downloaded it. There we go. All right, I'm going to share.
And these are like stock returns of specific companies?
Yep.
Ah, yes. Okay.
Okay. So what we have is returns in 2025 versus 2026. All right. So the 2025 full year return is the X, and the Y is the 2026. So if they did well last year and this year, they'll be in upper right. If they did well last year but poorly this year, they'll be in the bottom right. Okay. If they were bad both years, bottom left. If they were bad last year but good this year, they're in the upper left. So look at all these companies: Western Digital, Micron, STX, LRCX, that's railroads, Fix, and then here's the softwares: AppLovin, Palantir, Hood. I wish I had all of them out there, but what you can see on these companies is they make physical things. They build physical, or they move physical things around. They're connected to the real world. They're not just moving photons.
So question for you then, if I can get the setting back to where I wanted it. There we go. How come the oil companies aren't really participating in this then?
Because they are, my friend. Oh, they are.
Okay. Talk to me.
Oh, they are. Exxon made 52-week high today.
Did it? So is oil set for a comeback then?
I mean, energy might be. Let me pull up. And then I still have these stupid comparisons on there. Let me get rid of those. Share. Yeah. Okay. Now, I already told you what this is, but imagine I didn't. Pull that up. Is that a cryptocurrency or a energy stock?
Pull up a cat next.
Yeah, like I mean, is this Ethereum or Caterpillar?
I've got one more for you. ECL. This company basically has flat revenue, but they do water treatment facilities and pest elimination. Like, okay, what is that? What does that move?
RSI's 80.
Guys, this is a company that like should be trading alongside with like waste management. Like,
I mean, they've recovered pretty well since the bottoms in late October. I mean, that's not that they're not making a new 52-week high, but I mean, you could do worse over the last 4 years.
And those are a few names, by the way, that Bill Gates owns. He's got like this type of portfolio where he owns Waste Management, Ecolab, John Deere. I think he owns Cat too. Like, he seems to be set up pretty well for this. This rotation. Yeah, basically utilities.
I mean, okay, so we had, since the so no one wants to own software anymore, right? Which was, the first week of February, we're up, almost 10% in utilities.
Can you pull up some of the railroads for me, like UNP, UP?
This is ridiculous. Bro.
Never have I laughed so hard at a stock chart of a railroad company. Like,
CP, oh my God. CP's another one. What's the other one?
CP. What are we talking about, man? What are we doing here?
I mean, to be fair, this one at least does this every now and again. Look at this, right? This is basically the same action at all these spots. But this is still like, oh, no, we don't want software anymore. We just want the railroads and Coca-Cola.
Yeah, Coke is getting nuts. What's the PE on Coke now? Coca-Cola is now sitting at, okay, I guess it's not that bad. A 24 forward.
Yeah, that's not even that bad.
It's not, but they're also not hardly growing at all. Yeah, they haven't grown revenues fast. Their revenue has been outdone by inflation by 20%.
But like we said, the new trend is I don't care if your company's growing or if it makes money. Ideally, it makes money, but we don't really care. All I care is that an LLM is not going to eat your company. And an LLM cannot give you a Diet Coke. So it's just funny how 2025 was all like, oh, the AI is everything. Like, if you're not investing in AI, blah, blah, blah. And all of a sudden the flip switch, and now we're in 2026. And it's like, well, if your company is involved in AI, we don't want to touch it. I mean, the Yum Brands, is this an all-time high?
Might be. Spencer, if you're watching, you're welcome.
It certainly is the high for the last 5 years. Yeah, there you go. That's the weekly back to 2000. Jesus Christ.
CSX.
You know who hasn't participated is my favorite AutoZone.
Oh, no. Not AutoZone.
My AutoZone's taken 2 legs down.
Look how they murdered my boy.
Well, they murdered my boy. He's a new CEO. I don't know. What was the CSX?
Yep.
Man, this is going to be hilarious. Again, this This is a cryptocurrency. We didn't have this. We didn't get this run in Bitcoin and Ethereum. We're getting it in railroads. And oh, dude, I'm not gonna be surprised if this is also hilarious. I mean, look, these are all they all started on the same day.
I mean, this is just rotation out of like Amazon and Microsoft, right? And they have to put the money somewhere. Because like look up SCHD, it's up like 15% year to date.
Dividend TET.
This is a dividend ETF that's up 15% year to date.
This
Or
is
42 days into the year.
This is a dividend ETF with an RSI of 83.
It's value o'clock. It's got to be.
This is not sustainable.
Or was it just being underpriced the whole time because everyone was being growth hogs? Like, is this a catch-up trade, or do you think this is just out of control?
Well, they can't all go up at once. And that's what's happening. So, like I said, it doesn't matter if you're growing or if you make money. It's just if you're not a halo, you're going down. And if you are a halo, you're getting paid. Doesn't matter what you do.
Did you see Eaton is up 24% year to date?
I mean, the starting the like the January 26th.
Yeah, they have a huge backlog, Eaton. Huge industrial player, $156 billion market cap.
What are some shipbuilding stocks?
Like shipbuilding, I think HII is the one that Stock Talk likes. It ran up a lot.
It might have got a little too retail friendly already.
Yeah.
But I would take 150 to 425 in a year.
Yeah, he did a really good job with this one.
What are some other Verizon?
Dude, the boomers are having the last laugh right now.
They are. The boomers like, okay, we own all the real estate, and you're selling your and the Gen Zers and millennials are selling their software stocks and buying our stuff that we've been holding in our 401ks for forever.
Someone in the comments said AZZ. It's up 40% in the last 52 weeks, up 28% year to date.
What do they do?
I have no idea. $4 billion market cap.
Industries. They're industrial.
Okay.
So I mean, a chemical company maybe.
GE Veranova, 26% year to date. So yeah, it's broadening out. This seems healthy, right?
Yep.
I think you kind of want some breadth to the market.
Back on the days, back on the dailies. LRN, remember when we liked that?
Yeah, I luckily escaped out of that one just in time.
Really? Because if we'd have kept buying in December, we'd be Gucci right now.
That's fine. I did not want to let the dust settle because basically they had a huge customer exposure risk. They
yeah, but we were in it back here, right? Like we ate this gap down quite a bit, if I remember correctly.
Now, luckily, I did not have much money in this one. This was like a 1% position. This is an online education company, um, thus the ticker LRN, Stride, and they had started to move their way into some of the schools, and basically were selling to the schools and really, really strong fundamentals, but they had a customer concentration risk, and a lot of the revenue that they were seeing gained was from one particular school system in New Mexico, and they got into a big legal spat. So that was the reason for the big gap down. And I have not followed the story since because I'm really not interested in following a lawsuit between New Mexico schools and a software company that's concentrated. Yeah. So that's why I got out of it.
Look at Pepsi. Pepsi got an RSI of 85 last week. These are just insane.
Dougie, this is TradingView, right?
Yeah.
There you go. On the more fun side of things, you want to talk about SpaceX, right?
Yeah, I did. So SpaceX, so Elon made a little bit of noise this week with those of us that are a little more on the, maybe we're an Elon verse, or you're just kind of a fan, or you're a space nerd, and you got a little bit of whiplash when Elon said we're gonna go to the moon, because you're like, wait a minute, I thought the mission of SpaceX was to make human consciousness interplanetary. That meant we were going to Mars. Elon must have lied to us, because now we're just going to the moon. Okay. Look, you have to remember who this guy is. You have to remember how he builds things. He builds something, he destroys it, he tears it apart, he builds it back with less parts, he destroys it, he builds it back with fewer parts. That requires quick life cycles. He builds rockets by launching it, hoping it blows up so he can learn what went wrong with it. Turns out he had anticipated he would be able to have a lot more launches than he's been able to get cleared, specifically kind of more in the early 2020s, less so recently, but it's still getting his FAA waivers are is still somewhat challenging, not as bad as it used to be. But that has put Starship on a much slower development path than obviously his ability to anticipate. And we all know his timeline sense is a bit stretched to begin with, right?
Can you say that he's maybe altered the deal?
Sure. But find me a CEO who takes in new information and says, yep, nope, that's not going to work. We have to do something different. And he's ruthless like that. So he's like, okay, well, we do not have enough launch cadence to iterate quickly enough to get to Mars anytime soon. But one place we can go to the moon. And we can do a whole lot of things there and learn a whole lot of things there about what it's going to take to get to the moon and do that on Mars. But what it's going to take to get to Mars, and we can do a lot of that on the moon. Plus, now that we own XAI, we want to put a lot of data centers up there, and it doesn't make sense to ship all our data centers to Mars because the light lag is so much longer. Let's just do it on the moon. It's a much closer laboratory. Does that make sense? Plus, you're also supporting a whole other business now in XAI.
I think you just hit on it there at the very end. I think that's the real reason that he's actually changing the mission, is because you have an IPO coming up. He has to drum up some pizzazz for it, and Mars is just not going to be realistic in that time frame. Like, just getting there is going to take a while. let alone setting up shop there and finding someone or robots to be able to do that mission. Robots aren't ready yet. No one wants to do that mission. They know they're not coming back. Whoever goes on that mission to Mars is not coming back. We can get people back from the moon. So it just seems more attainable, right?
Yeah,
like people can attain that story.
In theory, you'd fly a starship there, an unmanned starship there to begin with, and then you fly it back, and then you land it there, and then you fly it back. Like, you're not.
How long would it take to fly a ship there? Like 6 months, a year?
It's like a 6 month. At the shortest flight, it's 6 months, and that window only comes around once every 18 months. So yeah, I'm sure he's still planning to launch a starship there within 5 years. But he's not able to iterate on all the tech he needs to design, build, test, tear down, rebuild, reinvent. The way he likes to engineer things. He's just run out of time to do it on Mars. He's got to do that closer. And he has a whole new business that he has to support now too. With the space-based operations. So it totally makes sense to me. Good CEOs understand when things have changed or when strategies aren't working, and they pivot and find new ones. The people who always want to attribute that to disingenuousness or call him a scammer or a liar or a grifter are always going to do that. But it sounds like a good CEO to me.
I wouldn't call him a grifter or a scammer. I would say that sometimes he misleads investors, and that he pumps a little bit. Like he builds excitement and tells a story, which you're allowed to do. But if it's true that he takes in new information and then changes his mind, like here we are in February of 26, and I'm still confused why you can't hail a robotaxi in Austin, Texas without a safety driver. Because he's really doubled down on the vision only thing. And if he's willing to change his mind about certain things, like why it's, we're looking at 6 years now of him not getting there. Does he need to hire a different team over there? Like what's going on with that?
So obviously I don't know.
Right.
And it's not like he doesn't make progress. It's not like the tech isn't progressing. Right? It's not like he's selling something that is not obviously just over the horizon. Now, it feels like it's just over the horizon every quarter, but while that remains true, it's obviously better than it was the previous time. Does that make sense? So
it does.
Progress is being made. It's just you don't know when you're there until you're there.
Right. But when you say that,
but he's still
AI self-driving is going to be
have to put a timeline on it.
Yeah, he puts timelines on things and then regularly does not come anywhere close to them. And then he says things like AI self-driving is going to be sentient, and then you can't even get people around a city without an employee in the car. There's just a big disconnect there between what he promises and then what gets delivered.
Okay. Well, I have something to tell you offline once we get done here. A little story to share.
Okay. Can't share it here?
But no, it's not for sharing here.
Okay.
But I really see, and people are wondering if the whole thing is going to get rolled up into Tesla anyway and get merged. I think that's obviously going to happen because the vision only piloting program is going to also fly SpaceX Starships. It's also going to land them on other planets. Like it's going to dock the two different vessels together autonomously. And I would not be the least bit surprised. It's what's going to run in the Optimus robots. Like vision is going to be how they navigate with the world. They're not going to have a whole giant sensor suite on it. So I think that is why he's really being so stubborn because he knows he has a laboratory to make this thing work.
You mean on Vision? That's why he's being stubborn.
Yeah,
okay.
Vision only, because he understands, in fact, once we can make it work on Vision only, and it does work, once that's perfected, we can roll that out into all the robots and all the different form factors that I want. Remember, Tesla robotaxis are robots. They're just robots on 4 wheels. A robot on 2 legs can use the same technology and the same sensors and the same camera sensor suite to do all the same stuff, except it just has more available outputs. Right? A starship is doing the same thing. That 2 starships that have to dock so one can refuel the other. Well, they're just going to be able to do that visually. They won't have to have full radar systems.
So you've got crossover. I get that idea. Am I the only one who is like kind of cold on the idea that humanoids are the most effective form of robotics? Like I feel like purpose-built robots, like the ones in warehouses, are going to rule the day a little bit. And I just like, I see a figure video and I'm like, wow, that's cool. But it doesn't seem like, I know it's going to get better and it's going to be doing chores and stuff, but like, I feel like industrial scale robots are going to be a lot more useful in terms of just like economically speaking.
This is an interesting question. I can make both arguments for you if you want to hear kind of both sides.
That's what we're here for.
And I see both of them. I tend to lean towards one, but I think I can make both cases pretty well. I think so. I'll start with, I think, trying to shine some light on the case you're making and flesh that out a little bit, and then we'll come back on the other side. So on the purpose-built robots are going to excel at what they do, and they will be able to be constructed with the minimum number of parts and the minimum amount of software, the minimum number of compute to do that task, right? They are not it's not a bad analogy to think of purpose-built robots as ASICs. It does one thing and it does it great, and you can gain some efficiency by reducing overall part counts, and you can leave out everything that is unnecessary to accomplish the task at hand.
And what I think of in my mind is like Amazon fulfillment centers.
Amazon fulfillment centers, right? And those robots can lift, a box that weighs a certain amount, that has certain dimensions on it, and it can move that box around all day long, and it can do it fast. And you didn't have to buy a whole lot of other hardware. You didn't have to build any extra servo motors. You didn't have to install any new stuff. The compute and the memory and everything that goes into it is purpose built for that job, and you're never going to ask it to do anything else. So you can limit your design to do what the task is. When you get over to the humanoid ones, those are what we should, humanoid is a bit of a trip. Let's just call them generalized robots. So now you have a GPU. It may not be as efficient from a part count, or you're able to run with the exact minimum design to accomplish a single task, but because you're building them to accomplish all tasks, you can start benefiting more from economy of scale. And if the task changes, you don't have to design a new robot.
Yeah, you've got like the generalist versus the specific.
Not to mention, most of the world we live in is designed around humans already. So as much as the Amazon Fulfillment Center is they're using robots there. If all the robots went offline, they would still hire a whole bunch of people to go do those jobs.
I know there's Dougie's law that this is the worst it'll ever be, but we're now like multiple years into trying to build robots, and like we're struggling to pick things up with our hands. And that makes me a little bit nervous that like maybe we're focusing on the wrong thing. Other than military application, that's going to be super useful. Like we don't want people fighting wars. That's kind of stupid. Um, but like doing dishes and folding laundry and cooking, like those seem like pretty difficult things to do to the skill level, and it seems like those are menial tasks that a robot will be able to do. Those actually seem like they're kind of difficult to do in the way that the human wants them done at the time that they want them done. um, but it also, I don't think those add that much value relative to something like a robot that's working in an industrial capacity 24/7, where like everyone just owns their own robot that's maybe doing an hour of work a day at most. um, I don't know, I'm just trying to think of it from that value lens, where like how much GDP is a humanoid robot adding?
Well, I mean, they're all convenience factors, right? I mean, do you consider your washing machine a robot? What about your dishwasher?
Of course.
Okay. Though, how much GDP did those add? Not counting the sales of the equipment and the manufacturing of them, but just like, but the fact that they exist in your, by the fact that you have a washing machine and a dishwasher, how much GDP does that add?
But those are already doing the task. So like, why do we need a robot just to throw stuff in the dishwasher? Like, that's the easy part, is putting the stuff in the dishwasher, is chucking the clothes in the washer. The the hard part is not putting the things in the industrial appliance. The industrial appliance is the thing that's adding the productivity.
Right. And yet people still hate doing them.
Just because it's
yeah,
monotonous.
it's convenience and luxury. So
Yeah.
what is a convenience and luxury worth? So all right, so let me ask you a question. What is the convenience for a single working mom with 3 kids who comes home and doesn't want to do laundry?
Can she afford that product though?
I mean, she's a professional, ideally, and she's got, okay, single mom, 3 kids, working professional. She has her income. She's getting child support for 3 kids. There's plenty of single moms living in really nice houses that would love to come home and spend time with their kids and not make dinner and do a whole bunch of laundry and do all that crap.
But we already know
you have to help the kids with the homework too. So
yeah, but that's going to be like one of the last use cases that comes into play though, because like what's going to happen is, like you said, you're going to have affluent people who are buying back their time for convenience. So we know that is like the first cohort that gets hit, is the people at the high end of discretionary spending. So like, how long
they
does it take before
the
robot becomes like a commodity and hits that bottom rung where like everyone's getting a robot? I think that'll take a long time, because they haven't figured out how to do the chores. And then the next thing that they have to figure out, which is what Elon actually talks about all the time, and I think he's correct on this, is the hard part is manufacturing at scale and doing so affordably. So it's one thing to actually like produce a robot that can do all these things. And then it's the second part that is like taking it to market and putting it to scale. And we're not,
where the super wealthy people are essentially financing the scalability.
Yeah, just like the iPhone or like TVs, right?
Yeah, it turns out the super wealthy were the only people who could afford a 65-inch TV, 15 years ago. And now, Walmart sells them for $300. So, yeah. And, as long as the government keeps its nose out and doesn't try to start regulating it, then prices will come down. And value prices will come down and performance will go up.
That seems like a when, not if, though. Like, they're definitely going to regulate robots.
Yeah, well, I mean, they do regulate televisions as well. I mean, that's what the whole Energy Star and blah 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 is, and there's certain channels that has to pick up, and the amount of bureaucracy that just go inside your television is terrifying.
There's going to be a bunch of people scared of the Terminator situation, so they're going to want it regulated. There's also going to be like the group, and you're already seeing this group now, the "they took our job" type people.
Yep. Yep.
The Bernie Sanders of the world. And then there's also going to be the regulatory aspect of you're going to have, and it's unfortunate that we have these people in our society, but there's people that are so dumb that have kids that are going to leave their children at home with robots, expecting the robot to play nanny. It's at some point there's going to be a horror story and something bad is going to happen, and then there's going to be like a public outcry for it, right?
There will be manufactured public outcry for it, for sure.
But it's going to happen.
Because the if the government doesn't have control, then they have to do something to save the children. I mean, that's what they're doing with 3D printers now. We have to save the children. I don't know if you're familiar with what's going on there in Washington State in particular, but
no. What's this one?
With 3D printer regulation. So the 3D printer has to have like AI built in it now that can analyze the part you're trying to print and shut itself down if it thinks whatever you're doing is going to be used in a gun. Which is what they're doing to make sure to keep the kids safe. But what they're not going to tell you is as soon as that tech exists, Disney is going to come up and say, no, you can't print Mickey Mouse anymore. Whether you design the model or not.
Yeah, Washington State's a whole other thing. Okay, they
yeah, but once they force the tech to exist, then it's just a matter of the lawsuit.
Right.
And then it is software that is embedded in your device that you buy and you can't turn it off. It's so incredibly stupid.
Yeah, I'm just not sure how you get out ahead of that. Kind of tying that all together here with Tesla and robots and SpaceX and the IPO, XAI merger. Looks like there were some XAI layoffs, but at the same time, like in the very same post, and I'm going to pull it up here. I was a little bit confused by this. Obviously, they're firing different jobs than what they're hiring, but it's always a little bit confusing to see it in the same exact tweet here.
That is a little bit of a double take, but it's to be expected. They're merging 3 companies. I'm sure there's a bunch of duplicate jobs.
The issue with trying to find an Elon tweet is that like he tweets a million times a day.
Hey, it's almost as bad as trying to find a specific Amit episode. What's up, Sam? Came for the free booze.
No booze, just I've got the Alani, the slush, cherry slush.
Oh, I got the Alani. Okay, that's my LSU girls have the NIL deal with Alani.
Dude, do we need to be looking at Celsius? Because that's like a pretty solid staple, I feel like at this point.
I think it lost 5% today.
Did it?
Yep.
Oh, here it is. It was pinned. Oh my gosh. I scrolled right past it. So XAI was reorganized a few days ago to improve speed of execution as the company grows, especially as quickly as XAI. The structure must evolve. Unfortunately, required parting ways with some people. But then, like in the very next sentence, we are hiring aggressively. It's like
he does this every few years. He did the same thing at Tesla. I think it was early last year, and everyone, tried to call him the devil or laying people off.
I mean, he's obviously not the devil, but like, I don't know. It is kind of strange to like in the very same tweet. Sorry, we're laying people off and we're hiring aggressively.
Yeah, the fact that it's in the same tweet is a little crazy, but
I'm sure he has ideas in mind of like who he's firing
Yep.
and who he's hiring. But
yeah, Celsius. I noticed it was down today because I've been thinking about getting back in on that stock. And by the way, if you're a stock holder, you're welcome because I have that shit on auto reorder from Amazon.
well,
And I'm up to like 2.5 a day now. This has gotten to be worse than cigarettes for me.
all right, so we can do a little live look here. So I guess we can just spend the next few minutes just like sort of talking about Celsius. So it's, I think this was back when they acquired, right? Or was this the acquisition back here? I think it was this one. This was the acquisition, wasn't it? The run up to 90.
No.
It was this.
The cliff dive off of 90 was not from the acquisition.
Okay. Well, no, it went up after the acquisition, so I think it was this one.
Yeah. That's
Okay.
that's around. Right.
Actually, yeah, that would make sense because if we look at the numbers of the revenue, yeah, there we go. It was last summer. So you can see the acquisition taking place here.
It's delicious, Laura. It's delicious. Drink it in the morning.
I mean, what a free cash flow print right there. Wonder what led to that. $300 million free cash flow. So even after the integration, their operating margin's still 25%, but for some reason we have a negative profit margin. Negative EPS as well. So let's go back up here, see what happened. Oh, other unusual expenses. Okay. So this must be like merger and acquisition charges.
Wong, I don't know. I've kind of stopped following the company. I feel like their deal with Pepsi kind of fell apart a little bit. Not that it fell apart, just like maybe they may have grown apart. But Pepsi was doing their distribution. I don't think they were doing the manufacture. But I could be wrong.
Oh, here you go. This is why I like this website. They put in cool information like this. So this is how much of their orders are coming directly from Pepsi. 35%. There you go.
Yeah, there you go.
And then Costco, 11%.
I love that company. I love Celsius. I love the product.
And everyone my age and younger does. That's the crazy thing. And even at my work in the cafeteria, there's basically a whole door on the fridge just dedicated to Celsius.
Yep. I can't drink the fizz stuff for various reasons, but so that's one of the reasons I like them. They're one of the few energy drink companies that have a flat, or a still drink. So they have the mango peach tea, they have the blue raspberry lemonade, and then they have some hydration packs as well, which are non-caffeinated. And those are good. We're like if I'm out at a rocket launch or something and keeps us from getting dehydrated. And then they also do have some caffeinated ones as well. The strawberry watermelon is my favorite of those.
Yeah, and I've tried all those except the strawberry watermelon. I will say they need to figure out how to like rip the packet open.
Yeah, make it a little easier to get into. Yeah.
Yeah, I'm 0 for 3. I have to use scissors all 3 times.
I rip it open with no problem.
Okay.
Anthony, dude, I've lost about 200 pounds since I started doing stuff, and drinking a Celsius a day has been a big part of it. Believe it or not, actually, the collagen that's included as part of it has helped me maintain or stop the hair loss that comes with rapid weight loss. So it's helped my nails and my hair maintain.
So we took out $800 million of debt, and we've got some accrued expenses going vertical here a little bit. So we have some stuff here on the balance sheet that I think I need to look into a little bit further.
Is that what nuked them today?
No. Like this debt this had to have been added during the acquisition because it's been on the balance sheet since the quarter before.
Because like this seems like a Halo company to me, and it has been trading like a software company.
I mean, you could normalize that growth curve on the revenue too, but like, would it be inappropriate to extrapolate that revenue out and expect them to grow at this rate? I think it would be. We can compare them to something like a little bit more mature, right? Here's Monster growing at single digits basically for the last few years. But they're profitable and have been profitable for quite some time. And for those who don't know, Monster Energy, best performing stock of the last 20 years. Better than NVIDIA.
In history. And ever.
Yeah, they've crushed it. But like they have really solid margins here. Very solid free cash flow. But they're not growing fast anymore because how could they? They're kind of everywhere.
Yeah.
I don't know, interesting space, but I do feel like caffeine is like the Gen Z favorite, and it's obviously habitual. It's one of the most addictive products in existence. And like, if you had the chance to buy Philip Morris in the 40s, like, would you?
Well, you have a chance to buy Philip Morris now because apparently nicotine is the new hotness. I don't do them, but I know like the chews are back. The dips are back in.
The Zen packets and the vapes.
Somebody asked earlier about weed, and I don't have an opinion on weed stocks, but I can tell you that I recently had an experience that reminded me that people actually smoke weed because I live in a generally weedless world. So I'm always a little like double taked when I was like, oh yeah, people do that.
It was actually getting really popular.
I'm in a drug testing protocol for work, and everyone I work with are in drug testing protocols. So I don't smoke weed, and no one that I hang out with smokes weed.
People are definitely smoking weed. So this was making its round on X.
Yeah. So when I went to New York, it was obvious when you got out of the car, when you got out of the Uber, people are smoking weed. And I'm like, oh my God, how do people, like, the stench is just stenchy everywhere.
Yeah, you hear Laura. I'm in Arizona. It's legal out here. I don't know if it's an investable space, just because like it feels like it's a commodity, right? So like you're kind of buying like coffee farms, or like coffee shops. Like there's low switching costs.
Thing people, yeah.
But like the overall demand is there. I mean, look at this. You've got like a lot of habitual users right here, and it seems to be going up. And as you can see here, like people are starting to say like, okay, is this really healthy? I don't think we ever like delegalize it, but the push for federal legalization may not be right around the corner.
I mean, I think eventually what they need to get to with it is, I mean, it's just colored poorly for so long because of the its status as a, the restricted nature of it by the government.
But yeah, like June says,
what you really need to do is eventually rewind and be like, oh, hey, remember when you're healthy at any weight the last few years, and now all of a sudden you're not? now all of a sudden people need to lose weight again.
But like June said, though, like there's no barrier to entry there. Like anybody can and does open a shop.
Yeah,
because
I like ultimately the libertarian in me says I don't know how you make a plant illegal. Like, it grows in the ground without
right.
anyone's help.
But does that make it investable? I don't think so. If you can find a play out there, let me know. I'm sure there's a profitable, sustainable model in there somewhere in the value chain.
I think it's just so new that you don't know who the winners are going to be. No one's scaling. All the operations continue to be small. I mean, there's no Philip Morris of weed.
Right. No matter how hard Wiz Khalifa will try.
Right.
Or is he the one with the weed business, or is it? I know Mike Tyson's got a thing.
They all have things. I mean, every celebrity has their own weed and their own tequila or liquor brand
Wine.
or their own vineyard.
Yeah. Even some politicians have some vineyards that may or may not be real. Hey yo.
Heyo. Well, right up there with their daycares.
What else do we have on here? V shape. Did we get a V shape?
Do we get a V-shaped
V
recovery
shape
out
or
of this?
slow recovery? Like, do we
Well, I
get?
mean, look, everybody complained for a long time and still continue. You hear all about it. Like Amit talks about this all the time. The K-shaped recovery, as if like that doesn't happen every single time. It's like, oh, this time it's different, and there's people who are being left behind. I'm like, that's always a thing. It's always a thing. There's always a K-shaped recovery. There's people who played the recovery correctly, and there's people who sold and didn't recover. And the people who held, they recovered fine. And then there's people who were recovering fine, and they got overexposed to software, and now the K looks like a totally different thing. But I get a little tired of the K-shaped narrative, but V-shaped recovery. It felt like we were going to do it again, though, didn't it? Like we bottomed pretty hard on Thursday, and then Friday everything was up. I remember you telling me don't look at the hood price because I had sold on Thursday, and then it's up like 18% going into earnings, and here we are right back down where I sold it. So yeah, I sold the bottom, but then it bottomed again.
I mean, the same thing happened to AppLovin, right? So that's the name that I hold. We saw it just go down, down, down to infinity despite the underlying business. And then it got a 16% pop on Monday just to get sold right back down again yesterday and today. And then the craziest move was Shopify.
Shopify, yeah.
Shopify was the craziest one because it was
just ripped.
Can you pull it up on a trading view? Because the candles on this thing must be insane, especially if it shows the pre-market move.
Yeah, I think if I go to the 1 hour, I think it'll show that. Yeah.
So Shopify reported like 31% or 32% top line in GMV growth. And it went nuts pre-market.
These are 1 hour candles.
Like within 1 hour, it reversed a 20% move.
There's 15 minutes. Yeah. It didn't reverse. It reversed and doubled down. But that's been software earnings. It's boom, the normal reaction to a killer earnings, right? Palantir ripped, right? And then, I mean, it took a couple days with Palantir. It didn't do it at the open, but same principle. What did they? All right, maybe it wasn't the greatest earnings ever.
Yeah, so I can do a few minutes here of Shopify.
I mean, I was getting ready in the morning, and I heard like what happened in the price action. I didn't like stick around for any of the analysis, but I did not realize that they missed earnings by 6%.
So they missed earnings because of net income because of
Oh yeah, there was a weird
non-operating
thing.
income.
Yeah,
Yeah.
yeah. Okay. Yeah. I remember. I
Um,
remember Emmett talking about that now. Okay.
so, and I talked about this. Emmett made a tweet about it, so I responded back and I put together something. So obviously, there's like this whole AI is going to replace them. Like we're going to build a Shopify in 2.5 seconds with some kid who came out of Stanford last week. Um, I don't think that's happening because you need merchant relationships. Um, there's that network is just too broad for that to happen. But I think even if you get to like this agentic future, Shopify's execution is really, really solid. So I don't think that ever becomes an issue.
See, here was another one. SoFi. Although it's a better earnings, but it did the same thing.
Yeah.
Ripped on the earnings, and then nope, fuck you.
Yep.
And then keep fucking you. Fuck directly off. All the way. Oh, dude, I did not set this. I did not set this today. This fib level. Look at that. Bounced perfectly. How long did I set this?
That bounce off of what was it, 1850 or wherever that is. I mean, it was barely there. I think that was like an overnight session.
Yeah. I'm just saying. I mean, so it would look like a wick probably on a
Right.
not as significant there.
But yeah, so for Shopify, so there's like the first angle of like, do they excel in an agentic commerce future? And I think that they can win that battle. I don't see why they wouldn't. But then the second thing is they're trading at a they're trading at, I think it's like a 65. I had looked it up earlier this morning. Let me find it here. Yeah, so they're trading at a 45 forward PE, Shopify is, and a 77 price to free cash flow. So it's like not close to cheap, really at all. And then if you look at, and if I can drive here for a second, I'm going to show some Shopify numbers. If you look at their top line and they're really all their operating numbers, like it's super, super strong. You're looking at 30% revenue growth, like sustained, very, very strong stuff. And then you look at the operating income and you're like, okay, great. Why is the market selling this off? And it's because of this right here, this non-operating income. So Shopify has Shop Pay installments. So that could be like your Klarna equivalent, where you're buying stuff on Shopify and you're breaking those up into buy now, pay laters. You're also going to have fraud. You're going to have disputes. And they also have Shop Capital and Shop Balance, which are investing into merchants. So they have merchant partners, and to try and stand up a lot of those businesses and help them excel and win, they're giving out some money. So they could do some belt tightening here. When you're losing $540 million in the trailing 12 months on a non-operating income expense, and it has nothing to do with SG&A or R&D, that's eventually going to eat away at your net income. So again, remember that this operating income here, you're looking at a very solid chart where they're getting operating leverage. But then when you look at the EPS, the picture is not nearly as pretty. And that's a direct result of those non-operating income items.
Mm-hmm.
The other thing it is too, the free cash flow is very strong, but it's decelerating. Okay. And part of the reason for this is look at the gross margin. So the gross margin used to be 54, 55%.
Yeah.
And then it started trending down. Why did it start trending down? Well, it's not necessarily a bad thing. It's actually a little bit of business mix. So Shopify has two different main revenue sources. You've got merchant solutions and the subscription solutions. So these are both like very good businesses. But if you look at the gross margin per each business, one of these is a lot higher margin than the other. One of them's at 80%. That's the subscription business. And then you've got the merchant services down at 36%. historically closer to 40. We'll see if that comes back. But what you can see on this chart here is that a larger and larger percentage of the business is becoming that merchant services lower margin business. So you're getting business mix shift away from the higher margin into like the slightly lower margin. So that is also going to change the gross margin if you're just like looking at modeling it out. That this is the part that's really growing here. You can even look at it in terms of percentage growth. You can see the divergence. Right, the merchant solutions is the one growing 34%, whereas the subscription is kind of tailing off and going down into the mid-teens. So those were my interesting observations that I had around Shopify when you think about paying the 65 forward PE and the 77 price to free cash flow. Is the decelerating free cash flow, even though it's definitely still going up. And then you've got these unusual items hitting your bottom line that I think they need to clean up. Because if you're going to say that that's a cost of doing business, in order to grow it, that you're going to have loan losses and fraud and disputes, then that needs to be factored into your overall profit margin. It just has to, because that money's not getting returned to the shareholders if you're writing off $200 million on a bad investment for a shop. So I'm going to stay away from for now, but I think long term they'll definitely be all right because they're an excellent run company. Did you have anything on Shopify, or it's just very boring e-commerce business? You want nothing to do with it?
The e-commerce business that I don't use, or that I actually use a lot, from like Rocket stuff, because it's all small vendors and everything.
This is the most interesting part about Shopify to me, is the TAM, the opportunity that they have ahead of them. Like, it's one of the most evergreen spaces that you can think of. E-commerce is becoming a larger percentage of the economy. Even still, like, people think that it maxed out in like 2018. No, like, e-commerce is still becoming every single year a larger and larger percentage of the overall economy. I think people are seeing that with Amazon, but you're also seeing it in these numbers here with Shopify. And then you just have the fact that like this isn't going to stop anytime soon. It's just going to keep continuing as the economy grows. So they have a really big opportunity to do something special here. But the business at the end of the day does have to bring that money back to shareholders. Otherwise, like, the shareholders just aren't going to get that return.
Right.
Then did you want to talk about your rotation? I guess you have got into it a little bit there with the trimming down of Hood and sort of right sizing your portfolio for stage of life.
Yep. So I am not the young buck that a lot of my friends are. Like I said, I enjoy hanging out with the youngins, but I ain't one of them. The fact that I partied them all under the table in Florida and New York last week.
Ooh, talk your shit.
I mean, Laura's in the chat. She knows.
It sounds like she doesn't.
Laura and Tess went to bed, and Dougie and the boys went back out.
Well, Laura the Beautiful, she had to get some sleep, okay?
And then we got to New York, and the story didn't change. The kid thought you were 32.
Which kid is this? You guys, who is this?
Oh, yeah. Some kid, like new grad, was asking questions about Miss Laura.
All right.
Yeah.
Was she about to take a little boy toy back with her to Colorado?
She said she didn't want to go to jail. Laura is a woman of refined taste. I don't think she's
yeah, we don't have time for
I don't want to speak for her. She can discuss her own preferences. But no, we definitely had fun. You're old enough to be his mother for sure.
That's always like a humbling line. Yeah.
Yeah. But what Laura might be confused about is I'm not sure that was necessarily a deal breaker for old boy for that kid.
He said that's a plus for me.
Yeah, he might have.
No, that's good that you were destroying everybody and out partied everyone,
Oh yeah,
showed
and
them
then
how it's done.
we got to New York, and everybody wanted to go to bed at like 10 o'clock, and I was like, "What is going on?" So yeah, so all that said, Dougie is doing a rotation. Um, this drawdown has taught me a couple of things. First is I really got to see a difference in just like overall health and the way you're maintaining yourself, your mind, and your body, and the way that that plays out in your account. Now I was just bragging about, out partying the kiddos, but you know, at almost 50 years old, if you don't have your sleep and you haven't been getting your exercise and and you've been eating bad, like you've been traveling and partying all week, um, you're just not mentally and emotionally as reinforced as you normally would be. And so if you get hit with a market disturbance like we all did, I was not capable of emotionally holding or just and walking away from it or just putting down the phone and just like taking the pain as I have been in previous drawdowns.
And that's particularly true if you're really overweight on a high beta name, right?
Yep. Yep. So yeah, so I couldn't take any more pain on Thursday, and I sold what might have been the bottom, and then I sold some more today on what may have been another bottom on my Palantir. So I've almost completely exited the hood position. I still have a little bit left in my traditional IRA. Palantir is almost all gone. Sold most of it in my brokerage account. Sold half of it in my big portfolio. Because I'm moving money into fixed income.
That's the way to be though, because you already won the game. So like
Yep.
you have
So
what you need to like retire and
I
live
have
life.
enough now that if I were to put it in, that I can put a portion of it in fixed income and completely replace my salary.
Good problem to have.
Um, so I can effectively lock in the current income, which pays all the bills, pays the mortgage, the house, the taxes, pays the car, would pay for another car, pays for the car insurance, pays for the flood insurance, all the stuff, groceries, food, health insurance, everything, all paid for with a dividend that comes in every month. And what I realized is I have to defend that. I cannot take another 50% haircut on top of what we already took, because then I can't put that in there. So that's what I'm working on building out right now, is building out the position, trying to take advantage of some red days in these names that I'm adding to. And I'm not going to cover those here. That may be more for another episode. But yeah, I'm building out those positions. And then what I'll be able to do is I'll be able to do things like rate covered calls and stuff for extra income, for fun income and stuff, right? But the goal is to get my budget together, figure out exactly how much I need to cover every single one of my bills, and buy enough fixed income to completely do that. And then I can get it. Then, because I have that lifestyle fully defended and it is wearing a suit of armor, then I can be hyper aggressive, but with a smaller portion of my account, but I can be more aggressive and I don't have to worry about losing it.
Right.
So that's Dougie may be a little on pause here, and I feel like I could be missing generational. God, it happened last April, but I could be missing another milestone buying opportunity here.
Like in a particular name, or do you just mean like in high beta
creation? I still want to double at least 2 more times before I retire, but and lack abilities at the opposite end of everything from where I'm at. But you can't. I don't think I can convey what it feels like to have put in 30 years of working and to worry about that disappearing, because
Right.
you don't have 30 more years to work to rebuild it, or you do not want to work another 30 years just trying to get back to where you are right now.
Right.
So getting defensive with a certain portion I'm defending a lifestyle that I have. And that's,
and you also want to be able to sleep at night too.
Right. Laura's right. And I appreciate all the good thoughts in the chat. But I don't want the fear to drive the decisions, Laura. But what I realized is for whatever reason, I was not able to hold it this time. And that's what made me realize I am more likely to flush more of it away if I don't defend the life I already have. Like, because I want to be able to go to conferences and do all the fun things that we did last weekend and travel for this and that and everything, right? Hey, Jan, what's up, man? And yeah, so as a result, I had to have a little come to Jesus moment and realize it's time to maybe you're
secure the bag, as the kids say.
But secure the bag. Yeah, secure the bag. That's exactly right. Take your winnings and actually let them start winning. And so now that I have a salary coming in that I don't have to wake up in the morning and earn, I can wake up in the morning and go earn. And all that salary I make now doesn't have to go towards paying bills. It goes directly into fun stuff or the market.
It's a very good strategy. And I know we talked a little bit, just privately, and I was really trying to drive home the point, because you can't know that it's the top, and it also might not be, like, but yeah, you gotta lock up the gains and make sure that your lifestyle is secure and that you do have that ability to retire. And at the end of the day, like, money is to be spent. So you do want to make sure that you can indeed spend it and not just
exactly. I want to spend it. I don't want to have it just disappear from my account without me withdrawing it and spending it on stuff I wanted.
But also we do have to be realistic that, like, we are playing a game that does involve risk, right? And like there are going to be times that you're going to take lumps. We definitely all took our lumps in 2022. That's obviously not fun.
I'm taking one tomorrow morning, brother. I'm taking one tomorrow morning. I have a lot of exposure to grab. I have about a 6-figure grab position, and 2/3 of it is options.
Okay. At least the volatility or the IV on grab is on the cheaper end. That's the good thing.
So buying it back. Hopefully I can buy back some of those calls above zero.
But sometimes I look at investing almost in like the sense of playing a poker game. So you're kind of putting your chips on situations that you think are going to be positive EV, positive expected value, and you're you're not necessarily trying to win 100% of the hands. You're just trying to make sure that the hands that you do win are like you're making good bets, you're making good decisions, you're not being outcome dependent. And, if you're not playing well, you're walking away from the table, and, you're sizing your bets appropriately. That's super important too, is sizing the bets, knowing
It's
where
okay
you're
to
at.
fold the small blind.
Say it again.
It's okay to fold the small blind.
Yeah.
Like
Yeah.
you can check or fold or raise. And so earlier I was saying I don't really see like an amazing opportunity right now, right? It might have been Baidu last year, but I didn't get in heavy enough. It might have been like I don't see a Hood or a Palantir out there right now, or hell, even a SoFi at back at 4. Like I just don't see these things.
They're out there.
Is it PayPal in the 30s? Is it going to be Grab in the 3s? Like, I don't know. But Grab is going to be in the 3s tomorrow morning.
I'm good on both of those names.
Venom, I am good. I am Gucci on the LNG plays.
But
I could take more, but I'll say this on VG. I want more, but I have a higher priority right now on a position I'm trying to build out. So, I'm not selling my VG here, but I'm not adding until I have, we'll call it Fortress Dougie built out. Once Dougie has built, and Fortress of Solitude isn't right because I'm married and Lauren has to live here too. But yeah, whatever our castle is, when I get the castle built, then I'm gonna start. Yeah, next decade and Venture Global are still major investments for me, and are going to be for a long time.
To try and tie a bow on that poker analogy, is even the best players in the world, like Phil Ivey and Daniel Negreanu or whoever you want to name, occasionally will get stacked, even if they make the right play. So I think it's important that to remember that what we do is super humbling, because we all take our turn getting punched in the teeth. I know Josh Brown said that on the Basis Point podcast, and we've seen Bill Ackman, one of the best of all time, sell the exact bottom on Netflix after it went down 70%, right? And he does it professionally with other people's money.
Yep. I saw he just got into Meta today.
Yeah, into Meta. 33% revenue growth is what they're guiding for at 45% margin.
Right. Laura, I wasn't looking for a 5x. I was looking for like a $6.50 exit, which meant they just needed to keep showing growth. In previous market conditions, they just needed to have growth. And now we're in a market that doesn't value growth, and so it doesn't matter whether you have growth or not.
So it's
gonna hurt tomorrow, and I don't know if I'm gonna exit or not, but it'll be a 60% loss probably.
Well, I'm just looking at what it closed at in the post session, 410. Let's see the after hours. You really think it's just going to fall right through 4?
Oh yeah, my average on my shares right now is 550, so that should give you an idea.
Grab. Let's see. 416.
Hey, maybe the market will say, hey, no, this is a distribution name.
Where's the growth coming from? It's 17, 18%?
Yeah. I think it actually was 20 or something. That y'all don't have to wish me good luck on Grab. I don't want it.
Are you gonna flush it or are you gonna hold it?
Well, let's just say I am not convinced on Grab like I was with Palantir and Robinhood.
And you could even see that with some of the people who were, bullish on it. That it's
it should be it should be a $6 to $7 stock still, even with the growth slowdown. Well, I agree with you, Laura. That's why I was already holding it into this foray back into the fours. But my options are decaying every day. Although they're 2020. So I have $5 calls for 2028. Doesn't that seem like that's going to end up fine?
Could end up fine. Like it'll end up above $5, but how much above 5, right?
Yeah. Well, and then I have $4 and $5 calls for January 2028. It seems like those should finish in the green. But
I'm not sold on the growth story, and I think the acquisition was a little bit confusing, especially seeing as how they were supposed to acquire GoTo. Like that was the story.
I don't understand what they're doing. So,
I mean, they're trying to build the super app, right? So they're trying to do the finance thing.
Yeah, I just do what you do. Like, do your SWOT, figure out what you're good at, and just like build your moat. I mean, you've convinced Uber to get out. Like, so lock it down. Unless there's okay. Well, here's the other thing is that I can't fully appreciate is what their regulatory environment is. I mean, they may be at a point where it's like, some of the countries they operate in are like, nope, you are not allowed to do anything that's going to allow you to expand your rideshare. So again, and that is a political risk. I believe they call it political risk. If you take business classes, but
well, I mean, this might be a mean comparison here, but like, Lyft has not done anything in 4 years. They've just round tripped back and forth between $10 and $18.
Yep, I really like their CEO too.
And like, this is a company that, I mean, they're not terrible fundamentally. They're starting to get the profitability. It's actually not that different than Grab here. In terms of
I know.
Fundamentally.
And Grab has cheaper multiples.
And faster growth.
Yep.
Because this growth is definitely...
and they have like less competition.
But like you said, maybe potentially a tougher regulatory environment. And then you've got the same issue that Uber has, which is the AV overhang on the stock.
Yeah. Well, Jan's kind of the closest thing. I should have been picking his brain more on this company. Because he's from that part of the world. But here I am stuck in it. So anyway, it's going to hurt tomorrow, and I'm not sure if it's a hold or an unwind. Try to start unwinding the position. But I have other things I want to do with that money. So it's almost like, yep, if it's not your baby anymore, drop it, get out. Like, don't hold something you don't believe in.
That has served me well, being ruthless when something's not working and it seems like the story is kind of like falling apart. Just like cutting it, getting out. And what was the phrase? Capital goes to where it's treated best.
Yeah, money goes where it's treated best.
Money goes where it's treated best. Yeah, he had lots of bars in that pod.
He had a great, and so we'll really, if y'all haven't watched Amit and Steve's the Basis Points podcast with Josh Brown, it was excellent. I was really worried because of all of the craziness that had happened in the market between when they recorded and when they went live with it, which was like a 2-week delay, that it would be totally out of date and stale. And it wasn't, because they didn't talk about current market conditions. They talked about the guest and about his journey and what it was like, in his career and everything. So I thought that was fantastic, and it served them very well that they didn't have anything that was like, you could listen to that podcast a year from now and it'll play
Exactly. Yeah, it's not going to age out.
I don't know if they released who the next guest is. I know who it is because Amit was supposed to pick me up from the airport and I was going to go with them to the recording, but my flight was off by like 15 minutes. So I didn't get to go meet the guest.
Dang. I do not know. I'm still in the dark on this one, so I'm excited. I'm excited to see.
Oh, it's I will say this is not new to Amit.
Okay.
But still a pretty good get for, an hour or something.
I think I know. We'll talk. We'll talk. It is getting close to midnight for you, right?
Yes, it is. And
I think that
okay, dude. Having to go back to the office on Monday makes the work week feel like it's twice as long. Because we used to work Tuesday through Thursday in the office. And we were home Monday and Friday. And then this year they dictated we have to be in the office again on Monday. And I was leaving for work and I'm like, oh my God, it's only Wednesday. So Monday used to be a day that, for most of my life, Monday was like, oh my God, it's Monday. It's like the old, like Kathy, you don't even know what that is. The old, like Kathy cartoons. Everybody hates Monday or whatever. And then I had this great job for like 4 years where we worked from home on Monday and it was great. And now it's like, oh my God, the whole work week. I don't know.
becoming more and more common, getting back into the office. I know Amazon's like full return to office. My company they were doing 2 days a week. Now they're moving back to 1 day a week. So getting interesting. But I think this is our sign off. Thanks everyone for watching, sticking with us for 2.5 hours, covering a variety of different topics. As always, links in the description for Doug's X, my X, the Street Exchange. Go watch Basis Points Pod, and that is it. Good luck to everyone in the markets. Have a great week. Ciao.
Bye, everybody.